Take a slow breath in and out. Let your shoulders drop. Now picture this. It's the 25th. You check the bank account. £87,000. Monthly burn, 28,000. 3 months of runway. But here's the question you're not asking. Are you burning cash to build a viable business, or burning cash hoping it becomes viable? Pause. You've been telling yourself, once we raise the next round, we'll have time to figure it out. But the real question is, what are your unit economics? How much does it cost to acquire a customer? How much do they pay you? How long until you're profitable per customer? You don't have the answers because you've been avoiding them. Here's what's actually happening. You're at 3 months runway because you spent the last year avoiding hard truths. You hired before validating the model. You spent on marketing without knowing your CAC. You built features customers don't pay for. Now you're in survival mode. The brutal numbers. Customer acquisition cost, £400. Customer lifetime value, £600. Payback period, 18 months. You have 3 months of cash. The math doesn't work. You can't spend $400 to make $600 over 18 months when you only have 90 days. This isn't a runway problem. This is a business model problem. Now imagine facing it honestly. Pull the real numbers, not hopeful projections, actual data. Last quarter, spent $15,000 on marketing, acquired 20 customers, £750 per customer. Average customer pays £40 monthly, 19 months to break even per customer. To reach profitability at this rate, you need 3 years of runway. You have 3 months. The hard questions. 1. Is the model fundamentally broken? If CAC exceeds LTV, you don't have a business. You have an expensive hobby. 2. Can you fix unit economics fast? Can you double prices, halve acquisition cost, change the model entirely? If no, shut it down. If maybe, you have 60 days to prove it. 3. Are customers actually paying? Not interested, not almost ready. Paying, renewing, referring. If not, you're building something nobody wants enough to pay for. The revenue first strategy. 3 months left. Stop all spending that doesn't directly generate revenue this quarter. Fire the brand designer. Pause content marketing. Cancel conferences. Every pound goes to closing deals, keeping customers, proving the model works. The customer conversation. Call your 10 best customers. I'm validating our pricing model. If I offered expanded features for double the price, would you pay it? I need honest feedback. If yes, premium pricing opportunity. If no, you need volume or different model. If maybe, your product isn't valuable enough yet. The team conversation. Don't sugarcoat. We have 3 months runway. Here's our unit economics. Here's what needs to change. I'm cutting all non-revenue spend. If we can't prove this model in 60 days, we'll need harder decisions. Everyone focuses on revenue now. Truth, not hope. The shutdown decision. Week 6. Numbers haven't improved. 6 weeks left. Most founders avoid this until it's too late. They keep burning cash hoping for a miracle. The honest assessment. Can you reach profitability with remaining cash? Not maybe if everything goes right. Actually reach it. If no, you have 2 choices. Shut down now with dignity. Pay your team severance. Return remaining cash to investors. Or burn the last 6 weeks and shut down broke, unable to help anyone. The hardest truth. Sometimes the answer isn't extend runway. Sometimes it's this business doesn't work. And recognizing that is not failure. It's wisdom. Picture yourself making the call. Not easy, but honest. We gave it everything. The unit economics don't work. I'm shutting down before we waste more money and time. Here's what I learned. Or picture the alternative. You find the fix. You triple prices. Customers pay it. Unit economics flip positive. You have a real business. Either way, you stopped lying to yourself. You looked at the numbers honestly. You made the hard call. Take one slow breath in and out. Cash is oxygen. Unit economics are truth. Sometimes shutting down is success.